Euro dollar. So the euro remains locked within a consolidation between key levels at 110.60 above and 107.96 below. A break on either side is now required for clearer directional insight, with a push back above 110.60 to extend the correction off that 105.20 December low, and while a break back below 107.96 would confirm a lower top at 110.60 or strengthen the outlook for a lower top at 110.60 and accelerate declines back towards the December base, which guards against more critical support in the form of the March multi-year low at 104.60 further down. Sterling dollar. So cable continues to adhere to a series of lower tops and lower lows off the 2015 high, with the market locked within a well-defined downtrend. A fresh lower top is now in place at 152.40, and this has exposed a retest of the 2015 low at 145.66 further down. As such, look for any rallies to be very well capped from here ahead of 152.40, with only a break back above that level to compromise the bearish outlook for sterling dollar. Dollar yen. So dollar yen is under pressure now after breaking down below some key multi-day range support, and now this latest low at 120.34, which exposes the next downside extension towards the 18.06 area. At this point, look for any rallies to be well capped, with ultimately only a break back above 123.76 to compromise the bearish outlook for dollar yen. Euro Swiss. So not much going on with Euro Swiss as the market continues to be confined to a multi-day, multi-week, and even multi-month consolidation, though given the lows that we saw earlier in January, the recovery outlook remains intact, and the market is favored to break higher back above the September peak at 110.50 and towards the 115 area further up. Ultimately, only back below 107.15 would compromise this constructive outlook for Euro Swiss. Aussie dollar. So although we've seen the market trade within a consolidation over the past several weeks and bid up in recent days, rallies continue to be very well capped here ahead of 74, with a longer term downtrend well intact. As such, only a break back above 74 would compromise the current downtrend, while looking for a bearish resumption would be the more favored scenario in favor of the next downside extension back towards the recent multi-year lows from August, just ahead of 69. Dollar CAD. So dollar CAD has seen a bit of relief off those recent 11-year highs. It's just above 140, and the market could see additional setbacks to allow for technical studies to continue to unwind, though the overall structure continues to favor additional upside, with the market locked within a well-defined uptrend. Eventually, we should see a higher low in favor of the next upside extension beyond 140.01 and beyond the 2004 peak at 140.07 towards the 145 area further up. Ultimately, any setback should be very well supported by previous resistance at 134.57, while only back below 128.32 would compromise the highly constructive outlook for dollar CAD. Kiwi dollar. So Kiwi is now trading up into some key resistance in the form of a medium-term resistance around the 6,900 area, and ultimately only back above this level would compromise the current downside structure and put pressure back on the top side. Until then, look for rallies to continue to stall out towards 69 in favor of resumption of the broader downtrend, and only again back above 69 would compromise this bearish outlook. S&P 500. So the S&P 500 has rallied up in recent trade out from the lows that we saw just under 2,000, but there have been signs of the market stalling out on a more medium-term basis and carving a longer-term top potentially. Look for a break back below those recent lows that we saw going back to the 14th of December, just under 2,000 at 1993 to confirm and accelerate declines back towards 1870. Only back above 2117 would compromise the bearish outlook for the S&P 500. Gold. So signs of a potential bottom in gold off recent multi-year lows at 1046, though the market will need to take out some key resistance at 1100 to strengthen this outlook and take the immediate pressure off the downside. Until then, the focus does remain on the downside, with a potential break back below 1046 and towards major psychological barriers at 1000 further down.